What's up traders, welcome to Failure to Displace. In this video we're taking a look at this morning's London session on EURUSD, where we've had a pretty mixed bag, to be fair, tricky session. Took my first loss on the unicorn entry model that I've been working with today after a really nice winning streak. Nearly got sucked into a revenge trade here, so I talked myself out of doing this trade, showed a bit of discipline. I didn't want to go back to back on these, so I was quite happy with that. It would have ended up with a TP1, so it would have been a risk-free trade or a break-even trade if I had taken it. And then I did take this second entry, which was quite nice. I'm pleased with this one. Well managed trade. I have closed out a little bit early at 2.4R, having taken this sell side, because essentially I'm done and I don't want to hold this any longer to try and take out TP3 because we're coming into the new hourly candle. So before we jump into the full analysis and break down these trades, I just want to touch on something that I've noted of myself this past couple of days. And hopefully by identifying this and documenting it down in a video, I'm going to save myself some trouble moving forward and be able to head these kind of problems off in the future. And so if you watched yesterday's video, you'll note that I took a trade that was outside of my trading plan. My trading plan dictates that I don't take trades within 15 minutes either side of a red folder news drop. However, yesterday I took a long position just as red folder news was going to drop on the euro. I justified that by the fact that it was a news event that I'm not massively familiar with, it not being a CPI, PPI or a rate change event. Therefore, I justified that the long was valid. However, it was red folder news, and rightly so. One of the viewers called me out on that in the comments, and they were right. That trade I shouldn't have taken. It did end up being a good trade. I did take a win on the entry. However, it has kind of bugged me because I know it wasn't part of my plan, and it was just the first sign that maybe something's not going right with my mentality this week. Moving on from that, this morning we took the loss. And then I spent the session, this whole run up here, fighting the urge to revenge trade to try and make back the loss. So it's telling me that my psychology at the moment isn't in the right place. I've had a fantastic winning streak. So this past month has been really great. This new entry model that I'm using is just phenomenal. And this was the first loss that I've taken on the entry model. And it's funny that this loss kind of coincides with poor management yesterday. And that poor management yesterday came from the fact that I didn't get triggered into a trade. So it was a really good opportunity at the start of the session to get a short position. And I failed to get triggered in. I was really frustrated, and therefore I took a long going into the red folder news essentially as revenge trading because I was so frustrated. I was jumping straight in and not following my plan, and I was worried at this point here that I was going to do the same thing. So we had basically swept liquidity in Asia, pulled down. I got stopped out straight away out of the long position. This was a valid, 100% valid entry. Was this one. Just proves that not every strategy is 100%. You're going to take losses. So I should have taken that on the chin. But immediately I switched to a bearish bias and noted that there was a breaker for a reversal here. So we had created equal highs, swung up, and then there was a potential for an entry here, which I very nearly took. But I was conscious. So I'm quite happy with myself here that this, again, could be the same as yesterday. This could be perceived as revenge trading, just trying to get in, win my money back. Turns out it would have worked out in this case, the same as yesterday's trade did work out. So I did manage to bag some profit, and I would have done on this situation as well. But I think I would have been frustrated again because I wasn't managing myself. I wasn't managing my emotions correctly. This has led me into thinking about a bigger question, really. Why? What's going on to cause myself suddenly to start not focusing properly? I thought I'd managed to put these issues to bed. And I think that that's been disguised by the fact that we've been on such a good winning streak. So you feel invincible when you're winning. And I thought that I'd really turned the table as far as my psychology and my personal management has gone. And this past 2 days has just shown me actually that maybe I'm not as far along the journey as I thought I would be. So I just want to document really what's changed this past week that could potentially have led me to not focusing or not executing as well on my strategy as I have done previously. And it stems from last week. I don't know if you've noticed in the videos, I've been pretty ill. Last Thursday, I got struck down with some kind of cold or flu, whatever it was, some virus, knocked me for 6. So I was no good on Thursday, no good Friday, really ill. Been in bed pretty much most of the weekend as well. As consequently, I've not been eating correctly, I've not done any exercise, I've had no fresh air. I'm still feeling groggy and under the weather now, can't breathe properly. And I think that is playing a part. I'm out of my normal routine that I would usually be in. When I come to the screens, you know, I'm usually out of bed pretty well. So I wake up feeling quite refreshed and I'm ready to get trading. Whereas this week, I'm not doing that. I'm waking up, I'm feeling a bit groggy. I've not slept particularly well. I know I'm not eating properly. I'm just kind of comfort eating at the moment, which is the worst thing to do when you're ill. But that's the way it is. I've not been to the gym. I've not done any exercise for almost a full week now. And I think that that's maybe having a knock-on effect. So that's one of the reasons why I'm potentially not performing as well on the charts as previously I would do. And maybe these small losses and this bad trade management, it's just a sign, just to let me know that I need to dial things back in a little bit, and that there's going to be moments in time where it's not optimal to be trading. And just to be able to identify this as quickly as possible before something catastrophic happens is a good thing. So this, I'm giving myself a pat on the back for doing this. Something else that's just cropped up is that we are coming up to the end of the financial year now, so your accounts need to be in and the financial bills are going to be happening coming into January. So I'm working on my finances just before Christmas, and I can see that my earnings are massively down from what I historically have done. It's not through any fault of trading, so trading hasn't been my primary income. I had a pretty successful business a few years back, and then COVID obviously hit, and as with everybody, had a massive impact and business never really recovered. And that's where I really started focusing more heavily on trading. But when you're doing the accounts and you see in real world what your earnings are and what your income has been compared to what it previously has done in previous years, kind of hits home. So it's made me potentially be more desperate to be successful in trading. At the moment, I'm only trading a small account. So I'm trading live with my live funds, but I'm only trading on a small account. And I'm trying to scale up. I want to scale into it with more investment as time moves on. And we're getting to a point where I'm thinking about scaling up again, which is why I'm documenting this little moment in time now, because potentially I'm not ready to do it yet. And the reason for that is that I'm thinking of doing it because it feels like I'm more desperate to make money now. I need trading to start paying off because my business isn't producing the income that it once was. And I don't think that's probably a good mindset to enter into trading. When I'm trading, when things are going well, it's when I'm not focused on it having to make money, so I can just concentrate on the process and I'm not emotionally attached to the outcome of every single trade. I thought when I was on the massive winning streak that was the case. Turns out that probably wasn't the case. What it was I was more or less resigning myself to the fact that I was going to win because I'd done so well this month. But having taken that loss and having not been triggered in yesterday and then revenge trading shows me that I've not put all of those negative emotions to bed. You know, there's still this urgency, this desperation inside me to make trading replace my business income, take me back to the levels I was earning pre-COVID. So I'm just documenting this now because maybe some of you guys are going through the same situation, and I don't think it's healthy. I think I perform much better when I'm not actually thinking about the money. I'm just looking at the charts, recognizing the patterns, executing, and everything's flowing. So there's a couple of things going on in the background in reference to my illness that's just knocked me for 6, and then obviously doing the accounts and seeing, you know, just how bad COVID has affected my business compared to what I was just a few years ago. It's made me feel maybe a little bit more desperate to make trading pay off, which is not a good thing and potentially an indication that I just need to maybe slow down a bit, pump the brakes and carry on, just rinse and repeat this process and get as emotionally detached from the situation as possible. So here we are after that little rant. For those of you guys that managed to stick it out, let's get stuck into the analysis now. I'm sorry for that, just wanted to get it off my chest. As always, we're going to start the analysis off on the 15-minute time frame. We're using our session liquidity tracker to show us untapped and tapped levels of session liquidity. You can find links to all of the indicators that I use in the description below, along with a quick video that outlines all of the settings that I've got. So if you want to set your charts up to replicate mine, then all the details are down in the video description. So obviously we can see that we are in a massively bearish move at the moment, coming into our London session. So London is starting at 2 AM for me. This is the time that I'll be starting monitoring price action from, and we can see just prior to the 2 AM candle opening, we've had big displacement in the Tokyo session, which does indicate that more bearish price action will happen. Tokyo's not consolidated, so the Judas swing is less likely in my opinion, having looked at all of this bearish displacement. However, we have swept the Asia low, so it does put me on the lookout for a long position. I am going to highlight this 15-minute fair value gap. So we've got liquidity into a 15-minute fair value gap at this point. So that is a potential reversal area. Having swept this liquidity, we could get a reversal further up into the Asia range. Specifically looking at Asia high. I mean, if we do a fib from this London swing high down to the Asia high, optimal trade entry would take out Asia and then take us into the New York PM session high, into this fair value gap, into this larger order block area. So we could get quite a large pullback, basically rebalancing all of these inefficiencies if we do that. So we are going to be dropping straight onto the 1 minute time frame, looking for our entry pattern here because we have swept session liquidity. So just prior to the London window starting, we'll scroll along now from 2 AM. So we'll get a quick displacement lower. So we had kind of relative equal lows here between the existing Asia low and this candle just prior to the London window opening at 158. We've now swept that officially, so we've had displacement outside of the range. Our breaker block would be this candle here. So these are the last up close candles that create a swing high. So this at the moment is an order block. We've got bearish displacement candles. Let's just move that across so it's in the correct place. Bearish displacement candles. So if we're looking for a reversal, we're going to want to see bearish fair value gaps being traded through and bullish fair value gaps being supported. And we want to see this order block failing as well, which would give us a nice break of structure and retest to potentially go higher into that fair value gap. So there's nothing here. The the order block is still at this point. So I mean, I've got a little break of structure, but we've not got a breaker block at the moment. So there's no entry at this point. We do come a little bit lower. We've swept that low now. Our new order block, breaker block potential, will be down here. So that's these three candles now. So these are the last up closed candles. So we have 1, 2, 3 bullish candles that create a swing high into a new swing low. So that's our new bearish order block. And we've swept the low, so our new breaker block is this one. So this is nice because it's just refining down. So this is the last bullish candle. Let's zoom in so we can see this. Last bullish candle, it creates a swing high and then creates a new swing low. So this bullish candle is a swing low. It's taken, well, it's not a swing low yet actually. It's a sweep of liquidity. Now it's a swing low. So we've taken that liquidity out. We've closed through this bearish fair value gap. We're into the order box, so we want to close above this now to flip this into a breaker block, which we get on this candle here. So time wise, we're at 221. This is now a breaker. It should have acted as resistance, is now acting as support. We've got a bullish fair value gap along with a bearish fair value gap. So this point here is a balanced price range. So when we have two inefficiencies overlapping, this is a magnet for price. Price will want to come back, balance this area because it's two highly inefficient areas. We want to rebalance that and then accelerate away. So that's a key point. That's just underneath the breaker block. And obviously we have this 1, 2, 3 candle fair value gap pattern inside the breaker block as well. Time is 2:21. Obviously we know that we like to get entered on the beginning of a new 15-minute cycle, which will be 2:30 for us. So from my previous videos, if you've not seen them, I'm really looking, again, it's not critical, but I'm looking kind of 3 minutes either side. So anything from 27 to 2:33, that kind of window is where I'd like to get triggered in. It's an added confluence for me. A new volume is expected to come into the market at the open of a new 15-minute candle. So that's what I'm looking for. So we are pumping away. We are, bear in mind here, we are into a pretty large bearish fair value gap. But we are back inside the Asia range. So we've swept out of the range and we're pulling back inside of the range, and we are potentially forming, well, we've formed our entry pattern now, which means that we will be looking to target, at the very least, these highs and then potentially the Asia high if this is going to be a reversal. Time wise, so we're at 2:24, 2:25, 2:26 into this fair value gap. So we've not tagged the entry yet, but we're into my window now. So this is where I would be dropping my entry. So looking at this again in hindsight, potential reasons why I wouldn't take this is we're delivering from this bearish fair value gap and we are respecting the 50% of it. So we've come up and we're closing underneath 50% consistently. So that potentially is a red flag for this particular trade. So this is why I do these post-session analysis, just to see where maybe I could have done things a little bit better. We've displaced down. This is the bearish candles are huge compared to the bullish candles. So if we look at this in hindsight, big bearish candles and then bullish candles coming up. So I wouldn't say that this is bullish displacement because the candles aren't bigger. However, we have left our entry pattern here, but we are rejecting from 50% of a big bearish fair value gap. So when 50% of a fair value gap's holding, it means it's pretty strong fair value gap, to be fair. So maybe I should have looked for extra confirmation. I preset my entry at this point. Stop loss was below the low. So to cover me, I go for 3 PD arrays. So the 3 PD arrays that I'm looking at are the breaker block, the fair value gap, large order block, and a balanced price range as well. So we've got plenty of PD arrays there to say that we should be safe. If price does break through those, then we are probably going lower, which is why my stop loss is just below the low at this point here. Entry 27, so we're right into the window now where I would like to take an entry. So this is all kind of stacking up nicely, barring the fact that we're respecting 50% of this. So it would have been nice to get a close through that fair value gap and then come down to tag me in. 29 and then 30, we're straight in to the entry. We're into the entry with a large volume imbalance. We've disrespected the 50% of the breaker block, which is not a good sign. So we're closing through the breaker block. We've tapped the balanced price range, but we just deliver straight lower, taking out these potentially could be considered relative equal lows as well. So looking back in post-trade analysis, that should have been a red flag. 50% of a large bearish displacement taking us outside of the Asia range. Small creep back into the Asia range. We did have some liquidity that we swept there and there. So some relative equal highs into an inefficiency. We've closed through, we've left this, so this should have been an order block. These up closed candles, these down closed candles, sorry, should have been a bullish order block, so you wouldn't expect price to actually close through those. They're now a breaker because we've traded through them. So stopped out straight away. This is what I noticed as soon as I got stopped out. That we'd left this as a breaker block, swept some liquidity into a breaker block, and we're displacing outside of the Asia range. So I was frustrated this didn't play out. More frustrated than I should have been. It's just one of those things. Immediately started looking for the short position now as we are going lower. Below us you can see we have untapped session liquidity, these green lines. So I was expecting now, after displacing below the Asia low, I was expecting a run on this liquidity. Therefore this breaker block, which is our nice bearish breaker, is a nice target. Support of the fair value gap that has held as well. So this was going to be my next entry. I was pulling a fib from the top of this move down to the bottom of the move. So again, 15-minute cycles. I didn't enter on this, but we came into the new 15-minute candle, so 245. So as I mentioned on this setup, anywhere 3 minutes either side. So anything here like 243 to 247, valid entry was this. I very nearly preset it. I think if it wasn't so aggressive going into there, it kind of caught me out. I think I maybe would have taken that. It was the fact that it was such an aggressive move in. So this was the trade I didn't enter. I didn't chase price. Stop loss was going to be above this swing high here. So above where the fib was. Expecting then a run on this low. However, because I'd taken the loss, this was my trade management thesis. I want to get break even as quickly as possible. So as soon as we got into a discount, which is below 50% of this trade, 50% of this range, I would have taken that as TP1. But I didn't enter. So let's not get confused. I didn't enter this. It felt like revenge trading. I didn't want to rush it. It was a big aggressive move. So I think if potentially we had not had such a violent move in, so we were closer to the breaker, I might have taken this, but because we'd moved so far away, it just reinforced the fact that I wasn't prepared for an entry. At this point, we can see if we scroll forward, we do go straight to TP1, so this would have been a risk-free trade. At this point, I'd have taken 50% of the trade off at TP1, cancelling this out, and then ultimately expecting a run on those lows that we'd identified earlier. We'll see as price continues. It comes up back into the entry. The rejection point, funnily enough, let's just use our fibs because that looks like it's optimal trade entry. Yeah, what would you know? The aggressive move up into the breaker, pulls away, comes back to optimal trade entry of this leg here. Let's just get rid of this. Comes down, taps optimal trade entry, which is a fair value gap, top of this bullish order block. I want to call these breaker blocks, but they're not. Does anybody know what the name of these are? If you know what the name of these are, then let me know in the comments what you would call that. It's not a breaker block because it didn't create a swing high that led to the low, so it's just like an opposing thing. It should have been an order block, but it's a failed order block. Is that a thing? Anyway, that there is at optimal trade entry, which is what we've come down and tagged, and then proceeded to go back into the entry. And then at this point, we start the consolidation. So you can see we're kind of consolidating. We've got relative equal lows here, building this box of liquidity. Then we've got relative, well, not relative equal highs, but we've got kind of 3 highs there. So we've got this swing high up here. So we've built this tight consolidation. From Stacey Burke, he says consolidations usually between 15 to 30 minutes or so. This is 10 past 3. We're consolidated to 328, so more or less 15 minutes or so, just over 15 minutes. Aggressive move outside of the consolidation. We've already highlighted relative equal highs here into a 15-minute fair value gap. So we've got liquidity, we've got money here, we've got a trend line, liquidity here. But we've built 1, 2, 3, 4, 5 highs into this level. I was looking at this after this consolidation. So again, this is potentially where I'm getting desperate. This is why I want to just acknowledge this in this video. I was very keen to potentially go long to that point. So I didn't take that entry, too aggressive, whatever, I didn't manage to get in there. But I looked at this. And this is the box setup, so we've had an aggressive move outside of the range. I was looking for an aggressive move back into the range. We're into a new half-hour candle, so 3:30. So we're back in, we've disrespected this fair value gap. So we've now got an inversion fair value gap. At this point, there was no entry given here. I was desperate for one. So we've got the breaker block is here. It's not these two internal candles because they don't make a swing high. So these equal highs, basically, I don't count equal highs as swing highs. So this is the last up closed candle that creates the swing high. So I'm looking at this as our bullish breaker block for a long. So we've not closed through it, we're still respecting it, so it's still an order block for me at the moment. We're well past the 15-minute cycle now, so we're into 345 here. So there was no entry at 3:30, we've just come back into the range, respected that order block. Aggressive move out. So at 345, we come back into the inversion fair value gap for a retest and then accelerate away. The breaker block is now created at that point. Price that doesn't tap the breaker runs straight into our inefficiency and takes the liquidity that we've identified there. So there was no entry at this point. I wasn't going to take an entry on the 345 candle because it's not the model. We hadn't created a breaker block as far as I'm concerned because we were still closing and respecting it and dropping lower. So the only confirmation for an entry at that point at 345 was the fact that we're at an inversion fair value gap, which isn't enough confirmation for me. We did have an order block there, but the order block wasn't tapped. Nothing there, so I didn't take that entry anyway. And then when I was looking at the breaker block, we never actually came down and tagged the breaker block. If we had come down and tapped that, then I think I would have taken the trade to go long. Coming to this inefficiency, so we're now watching price. Again, we're looking at these, so we're building these consolidations. Relative equal lows. It's funny how when you watch these things, this seems, if you are watching ICT regularly, and you'll see now a spate of new videos coming out about ICT's buy models and sell models, because that's the thing he's going to be teaching shortly. And it's funny how when people start highlighting these, this looks very, very similar to the market maker sell model developing, because we have this price up, consolidation, consolidation, and then we're going to break down and reprice all of this. And then the entry that we're going to take is going to be based on ICT's. Now, I'm not saying that I understand the model fully, but I think that this is going to be pretty close to what ICT mentions about his second stage distribution, or whatever he calls it, for the ITT sell model. So we are creating a consolidation up at the top here, having swept this liquidity. So what we like to see is we like to see a swing outside to sweep liquidity, and then an aggressive move back into the range, creating our breaker block setup. So there's our sweep outside. It's 419. Swept it, aggressive move back inside. We have now closed over this bullish fair value gap. So we're closing over bullish fair value gaps. This is potentially a inversion fair value gap now. We leave a very large fair value gap with a large displacement. So this is now a balanced price range, what we highlighted initially. So we have a bullish fair value gap followed by a bearish fair value gap where the two inefficiencies overlap. Price will be attracted to this area to rebalance. And when price does rebalance this area, you generally get a large reaction. We can see again, huge, significantly larger candles in this move, bearish candles, than the bullish candles. So similar to this situation that we had coming into the session, the displacement was all lower. This is kind of just grinding up. So it makes more sense looking at this in hindsight. And we are sweeping into a higher time frame, 15-minute inefficiency, rebalancing that inefficiency and then pulling away. Our breaker block are the last two down closed candles that take a, well, the last candles that create a swing low and then create a new high. So that would be these two candles right here. We've got these two consecutive down closed candles. They create a new swing low that leads to a new swing high. And then we have displacement lower. So this should have been an order block. It's now failed. We've traded through it. It's now a breaker block. We've got a fair value gap inside the breaker block. We've got a balanced price range inside the breaker block. We have yet another inversion fair value gap inside the breaker block. And obviously we have bullish candles which will act as order blocks now to support a bearish move down. So this is the entry. It's the exact setup again. We've swept liquidity. We've built a box of liquidity inside. So we've built some internal liquidity, swept it, pulled away. So we're looking for an entry around to 430, which is the open of our new 15-minute candle. Again, that's not essential, but it is a nice additional confluence. I already have enough confluences here to take this trade short, which means tap of the breaker block on a short position or long position. Tap of the breaker block, stop loss is going to go above the high. TP1 is going to be 1-to-1 on this one. When I was managing this in live time, we have this fair value gap, this balanced into this order block area. 1, 2, 3 candles there. So I just want a quick TP1, so I'm going to take 50% of the trade off at 1-to-1 just to make myself risk free, and then leave the rest to run, targeting nice swing low here. My sell side. Sell side here, sell side here. Sorry, I'm struggling to do it. Sell side here. Got plenty of targets to be laddering out of the trade and then ultimately expecting this session low. to get taken. Let's watch for where the entry is. So still displace a larger fair value gap here. Disrespecting bullish fair value gaps, so added confirmation. So what's the difference between this and the first long that I took? We weren't disrespecting bearish fair value gaps for a long position, were we? We were respecting this large bearish fair value gap. We're not respecting bullish fair value gaps at all here, so we're not rejecting off a fair value gap, we are closing through them. So more confident. Relative equal lows here now that we've just created. Builds confidence in a short position, so this is prior to the start of the new 15-minute candle. We've created relative equal lows. The price has come down, it's failed to take this low and is pulling back. So we'll pull back, open at 430. 432 is when we get triggered. So we're within that window there into this this trade. And then it's a grind. This just goes on and on and on without hitting TP1. We can see that we do come back aggressively into the stop loss area, bouncing off the BPR. I recorded this live, so we'll jump to the live commentary now so you can see my thoughts as I'm trading this in live time. It may be useful for you to see this, how I'm handling it emotionally, and also it'd be useful for me to look back on in the future as well, just to see how that went. I just want to press record on this trade. I know it's dragged on. I got entered at 432 and we've just had consolidation. We pulled right back into the BPR, so this has been a really painful trade. At acceleration now, driving down towards TP1, so I had to undergo quite a bit of drawdown. I just want to record this to show patience and remind myself just to sit on my hands. I mean, I nearly closed out at break even as it was approaching this. I nearly closed out at break even as we came back into profit. I was like, no, I've taken one loss this morning. I want to follow the plan. Okay, so there's TP1 hit. Thank Christ for that. Ah, what an emotional couple of days this has been. So we've got this balanced price range to be aware of. TP2 slightly lower down. Through the balanced price range. I'm not sure. Today's session has been really, really difficult. I don't know whether I've made it difficult on myself, over analysing. Frustrated with myself because I didn't follow my plan yesterday. I took a trade during red folder news, although it was a winning trade. Probably shouldn't have taken it. Let's just check where we are. Do you know what I'm thinking? Optimal trade entry, swing low there. This is a better TP2. I should have thought about that earlier. I'm going to close 50% of the remaining trade at this point here because this is optimal trade entry. So yeah, we'll secure another 50% of the remaining trade at this point. We're coming into 10:15. There's a new 15-minute candle. That is why I decided to take TP2 at optimal trade entry. And I'm glad I spotted that. Should have had that on there earlier, I would have thought, in the analysis. But we can see the reaction that we get from optimal trade entry. Big pullback. Obviously, we are outside the trading window now, so the actual trading window finishes at 10 AM. So this is kind of the gap now between London and New York, where volume can tail off, all kinds of stuff can happen. So feeling good that I secured profits there. Doesn't that seem like a good decision now? Taking profit there. We're coming to that balanced price range that we left earlier on. From that sharp move up and sharp move down, you can see an instant reaction from it. So this may seem, when I was initially doing this, you may have been watching that thinking that that was quite a rash move, moving my take profit there, but it just shows how you need to think on your feet sometimes. And obviously I'd missed the fact that we're at optimal trade entry and only kind of realised as we started the new 15-minute candle. So again, something that I do all the time is I check 15-minute cycles to see what's going on. Obviously we're coming into the new 15-minute cycle and I could see that we're at optimal trade entry and close to a level of liquidity. So that was the driver behind it, and we can see obviously that that was a pretty good decision now, because otherwise we are back into drawdown and this could have been a break-even trade if this continues, whereas now at least we have profits. We've got some profits in the bag. So if this does decide to run the highs, we're still going to finish in the green. So it was good trade management in my opinion was this. I hope you kind of agree. So this is our last line of defense, which is the wick at the very high here. And so ICT has said many times that wicks can be treated the same as fair value gaps. Essentially, these are an inefficiency, and with fair value gaps we like to monitor 50%, see if 50% is holding or not. And you see, funnily enough, we have tapped 50% exactly of that wick, so consequent encroachment is tapped, and now price is reacting and dropping away. So that's our last line of defense. It looks like we're potentially going to hit stops here, but it is interesting just to see that 50% of the wick has caused that kind of reaction. That, in my opinion, would be the last inefficiency in this price leg before sweeping the high. So now everything has been rebalanced from this bearish move, and now all of our inefficiencies are on the bullish side. So we could potentially come back down to rebalance these now without taking this high. We've rebalanced everything on the bearish side. Maybe we come down and rebalance everything on the bullish side now. If we are bearish, it's going to seek liquidity. It's going to seek sell side liquidity. So this could just be, like I've just mentioned, a rebalancing act to rebalance the bearish price action before we go and seek liquidity, which would mean running this low, and running TP3 for us, which would be excellent if that does happen. I've just got back from my walk. We can see we are now making progress, finally. This is interesting to note. So we had essentially 45 minutes of consolidation, and then at 6:33, large engulfment and a big injection of volume, which has now driven price lower. So we've swept these relative equal lows, which was originally our TP2. We've taken this swing low and we've taken this swing low. So we are now quickly approaching TP3 region just prior to the stop hunt hour opening up before New York. So our news is going to drop at 8:30. Well, in fact, we've got Euro news at 8:15, and then 8:30 we've got the red folder news on the US dollar. And so there's room here for this to take a run at this low, hopefully, before reversing. I'm going to be honest, where are we at now? 2.4. Having swept that low, we've got... I'm considering just closing this out. because I want this video to be done with. We are into this breaker block. Yeah, I'm going to close this out in full at this point here. So I'm going to take TP3 here, buy side, sell side has been swept. We're coming into the new hour very, very shortly. We could potentially get a big pullback. It could run. If I'm honest with you, emotionally, I'm done. Come back. I was hoping to see it just to take profit while I was away from the screen. I don't want to sit now for another hour watching this tank around. I'd rather just take my profits here. We've made up for the loss that we took earlier on in the day, so that's fine. We've showed good discipline sitting through all of this. I just want to get it closed before the new hour opens, because I think I'm running out of emotional capital now to sit and continue watching this go through. I've got stuff that I want to do with the day. I want to create the new video for you guys so you can see this in action. So we will close out in full at this point, back in 2.4. There we go, she's done. Here we go, guys. This is finally the end of this video. I'm just closing the edit now and thought I'd check where price is, and the news drop did eventually take us down to hit our target. So we did manage to get the full 3.7R of the trade, managed to deliver the full 0.37R. However, as I mentioned, I closed a little bit earlier. So sorry for the long video, very long drawn out. We've been through a bit of a roller coaster on this one. Hope you enjoyed it, and I hope you found some useful insights in there. If you did, please leave the video a thumbs up. If you've got any questions, leave them down in the comments section below. Perhaps try and help you out where possible, and also I'd appreciate your feedback. And likewise, if you're enjoying the content and want to see more videos like this one, consider subscribing. Thanks for watching. I'll see you again in the next video.